My name is Ava. I'm 31 years old, and until last spring I spent every morning tying on a navy apron at Brew and Bloom Cafe on the east side of Charlotte. The cafe sits in the middle of the business district, where bankers, lawyers, contractors, and executives stop for coffee before work. I like the routine. Coffee teaches you something most people overlook. The regulars don't come for caffeine. They come because someone remembers their name. Everything changed during the cafe's anniversary celebration when my father walked through the front doors. He looked around at the customers, noticed my apron, raised his champagne glass, and laughed loud enough for everyone to hear. I paid for 4 years of college so my daughter could learn how to spell names on coffee cups. The room laughed with him. Some because they thought it was funny. Others because he was Grant. Successful people rarely laugh alone. I smiled, handed him his coffee, and went back to work. At home the jokes never stopped. My younger brother Luke already managed projects at my father's construction company. My mother introduced him by his job title. She introduced me by saying I was helping out at a cafe until I figured things out. What nobody knew was that every evening after my shift I attended graduate finance classes, studied commercial lending, and quietly built a different future. I stopped explaining myself because some people decide who you are long before they listen. A regular customer named Ben noticed the finance books I studied during breaks and asked what I wanted to do next. 6 weeks later he introduced me to a regional commercial bank. I got the job and never told my family. 11 months after my father mocked my cafe apron, his construction company submitted an emergency application for a $14 million loan. The file landed on my desk. And for the first time in my life, my father had absolutely no idea who was about to judge his future. 4 days after my father's loan file landed on my desk, we crossed paths without either of us expecting it. It was my mother's birthday dinner at a quiet steakhouse downtown, the kind of place where everyone speaks a little softer because the prices do the talking. My father arrived late, still answering calls from job sites, and spent most of dinner explaining why successful people never really stop working. Then he noticed I wasn't wearing my cafe apron anymore. I was wearing a navy business suit. "So," he asked casually, "you finally found a real office job?" Before I could answer, my mother smiled and said, "She's doing paperwork at some bank now. At least she's indoors." That was it. Nobody asked what I actually did. My father nodded once, ordered another drink, and went back to talking about the company's newest commercial project. Sitting there I realized something strange. My family had spent years deciding who I was. Learning the truth would require admitting they'd been wrong, and most people avoid that whenever they can. Back at the bank, the loan review officially began. Commercial loans worth $14 million don't move quickly. Every financial statement had to be verified. Every property needed a new appraisal. Existing debt agreements were reviewed line by line. My role was to analyze cash flow and determine whether the company's projections matched reality. The numbers told a very different story from the one my father shared at family dinners. Revenue remained strong, but cash reserves had nearly disappeared. Projects were finishing late. Material costs had exploded. Clients were taking months longer to pay invoices. The business wasn't failing because there wasn't enough work. It was struggling because growth had become more expensive than stability. As I worked through payroll records and equipment schedules, I recognized names I'd known since childhood. Men who used to give me candy bars at construction sites. Foremen who taught me how to read blueprints. Suddenly the file stopped feeling like revenge. Hundreds of employees depended on this company. Their mortgages, health insurance, and children's futures had nothing to do with the mistakes made in the executive offices. Then came the management presentation. My father walked confidently into the conference room, greeted executives by name, and never once looked toward the analysts seated along the wall. 20 minutes into the meeting, a senior lender asked a question about the financial forecast. My supervisor turned toward me. "Ava, would you explain the assumptions?" For the first time since the cafe, my father really looked at me. Not as his daughter. Not as the girl he'd mocked behind an espresso machine. But as the analyst explaining the numbers that would decide whether his company received a $14 million lifeline. The morning after my father saw me in the bank, nothing felt different. The doors opened at 8:30, customers filled the lobby, and my inbox was already packed with work. Banking doesn't stop because your personal life changes. My supervisor handed me another file marked collateral review. It listed every building, truck, machine, and piece of equipment my father's company still owned. For the first time, I realized the $14 million loan wasn't about trust. It was about whether the business still had enough value to support the risk. Over the next 2 weeks, I visited construction sites to verify assets. Many workers recognized me from years ago when I visited job sites with my father. They didn't know I was reviewing the company for the bank, so they spoke openly. I heard complaints about delayed supplier payments, rising costs, and projects falling behind schedule. Their conversations matched what I was seeing in the financial reports. The numbers revealed the real problem. The company wasn't short on work. They'd taken on too much. Every new project required millions in upfront costs while customers often didn't pay for months. Revenue looked impressive, but cash kept disappearing. My father always believed bigger was better. Now that same mindset had pushed the business to its limits. That weekend my mother invited me to dinner. Halfway through the meal, Luke carefully asked whether banks ever approved loans because of family relationships. I explained that major loans aren't decided by one person. Analysts, attorneys, auditors, and committee members all review the facts. I don't approve loans, I said. I evaluate risk. My answer wasn't what they wanted to hear. A few days later, my father asked me to lunch. For the first time, he admitted the business was struggling. He never asked for special treatment. Instead, he quietly asked, "Do they think we're finished?" I answered honestly, "They haven't decided yet." As the final reports came in, one senior lender summed everything up. "This company doesn't have an income problem. It has a discipline problem." I couldn't disagree. Before the file went to the credit committee, I completed my final recommendation, balancing every strength against every weakness. As I left work that evening, Luke sent one short message. "Dad says he's proud of what you've become." It wasn't quite an apology, but it was the closest I'd ever received. Now the decision rested with the committee, and everything depended on what happened next. The credit committee meeting was scheduled for the following Tuesday, but before any vote could happen, the bank's risk department requested one final round of due diligence. Large commercial loans rarely fail because of one obvious mistake. They fail because of a dozen small problems nobody bothered to ask about. For the next several days, my entire team reviewed every major contract my father's company had signed during the previous 3 years. We weren't looking for fraud. We were looking for confidence disguised as certainty. Every delayed project, every unpaid invoice, and every revised completion date told part of the same story. The company wasn't running out of work. It was running out of time. Late Thursday afternoon, another report landed in my inbox from the outside audit firm. I expected routine updates, but one section immediately caught my attention. 3 ongoing projects had gone significantly over budget because material costs had nearly doubled after contracts were signed. My father had refused to renegotiate with clients, believing the company could absorb the losses until future projects balanced everything out. Instead, every new contract quietly buried the previous one a little deeper. For years, growth had hidden those losses. Once the market slowed, there was nowhere left to hide them. That evening, my supervisor asked me to stay behind after everyone else left. He closed the conference room door and placed 2 folders on the table. One contained my father's financial projections. The other belonged to a completely different construction company requesting a similar loan. "Forget the names," he said. "Tell me which business deserves the bank's money." I spent nearly an hour comparing both files. When I finally answered, I surprised even myself. The other company looked safer. My father's company looked riskier. But it also employed nearly 4 times as many people. For the first time, I realized the committee wasn't deciding whether one businessman deserved another chance. They were deciding whether hundreds of families deserved to keep their jobs. As I drove home that night, I passed Brew and Bloom just before closing. The lights inside were still on. Through the front window, I watched 2 baristas cleaning the espresso machine exactly the way I used to. For a moment, I remembered the day my father laughed at that apron. Back then, I thought he had embarrassed me in front of strangers. Now I understood something different. That cafe had quietly prepared me for the one decision my family would never believe I had to make. The committee meeting was only 4 days away, and for the first time, I wasn't afraid of facing my father. I was afraid of making the wrong decision. The closer the credit committee meeting came, the smaller my world became. My days belonged to financial reports, loan documents, and risk assessments. My evenings belonged to phone calls I no longer wanted to answer. Somehow the news had spread through the family that I was involved with the loan review. Nobody understood exactly what my role was, but that didn't stop them from believing I could change the outcome. One by one, relatives who hadn't called in months suddenly remembered my number. Some tried being friendly. Others hinted that family should always stand together. None of them asked how I was doing. Every conversation eventually circled back to the same question. Is there anything you can do? The hardest call came from Luke. Unlike everyone else, he wasn't trying to manipulate me. He sounded exhausted. He admitted payroll was becoming a weekly challenge, subcontractors were demanding faster payments, and several longtime employees had quietly started looking for other jobs. These people trust Dad, he said. They've been here 20 years. I knew many of those names. I remembered company picnics, holiday parties, and afternoons spent running around construction sites while those same workers joked with me like I was part of their own families. For the first time, the loan stopped feeling like a business transaction. It became a decision that could change hundreds of ordinary lives. Inside the bank, the atmosphere remained completely different. Nobody cared about family history. Every recommendation had to be supported by evidence, not emotion. During one review session, a senior lender reminded the team that banks don't exist to rescue bad decisions. They exist to finance businesses capable of recovering. That sentence stayed with me all afternoon because it forced me to separate my father from his company. Grant had made mistakes. The employees hadn't. That evening, I drove past the company headquarters on my way home. The parking lot was still full long after sunset. Through the windows I could see lights glowing across nearly every floor. Dozens of people were still working, completely unaware that 7 strangers sitting around a conference table would soon decide whether those lights stayed on next month. I realized then that if the loan was approved, it couldn't be because my father needed saving. It had to be because everyone else inside that building deserved a chance to keep building the lives they'd worked so hard to create. The credit committee met the following Tuesday at 9 o'clock sharp. 7 voting members sat around the long conference table, each carrying the same thick binder filled with financial reports, audit findings, cash flow projections, and risk assessments. Analysts like me weren't there to vote. We answered questions, clarified numbers, and stayed quiet unless someone asked for our opinion. Once the meeting began, personal feelings disappeared. Everything came down to evidence. For nearly 2 hours, the discussion moved back and forth. One committee member argued that my father's company still had strong contracts, valuable equipment, and decades of industry experience. Another pointed out the declining cash reserves, aggressive expansion, and years of weak financial discipline. Every positive argument was matched by an equally serious concern. Listening from the side of the room, I realized there wasn't a right answer. There were only different kinds of risk. About halfway through the meeting, the committee chair turned toward me. "You prepared the operational review," he said. "Based on everything you've seen, do you believe this company can recover if the loan is approved?" The room became completely still. I knew exactly what everyone expected. Either blind optimism because the owner was my father or unnecessary harshness to prove I could stay objective. Instead, I answered the only way I could. "I believe the company can recover," I said calmly. "But only if it becomes a different company than the one that created these problems." I explained that the business still had experienced employees, loyal clients, and profitable projects. The problem wasn't the work. It was leadership decisions that had prioritized constant expansion over financial stability. If the bank approved the loan, strict conditions had to be attached. Monthly reporting, independent financial oversight, limits on executive spending. Without those changes, $14 million would only delay the same crisis. When I finished, nobody spoke for several seconds. The committee thanked me and continued deliberating behind closed doors while the analysts stepped outside. I waited in the hallway for nearly an hour, staring through the glass windows toward the city below. Finally, the doors opened. The relationship manager walked out holding the signed decision folder. He looked directly at me before saying quietly, "The loan has been approved, but your father isn't going to like the conditions." The approval didn't bring celebration. It brought negotiations. The bank's conditions were stricter than anyone at my father's company had expected. The $14 million loan would only be released if the company accepted a complete financial restructuring. An independent turnaround advisor would oversee operations for the next 18 months. Major purchases required bank approval. New contracts above a certain value had to pass financial review before being signed. Executive salaries were temporarily frozen, and every quarter the company would report directly to the bank's credit team. When my father received the conditions, he didn't call me immediately. 2 days passed before he asked if we could meet after work. We sat in the same quiet diner where we talked the week before. This time he looked older than I remembered. He slid the loan agreement across the table and tapped the first page. "They don't trust me anymore," he said. I looked at the document before answering. "They trust the company," I replied. "They just don't trust the decisions that got it here." For several moments he didn't speak. Then, almost reluctantly, he admitted something I'd never heard him say before. "I kept believing one more project would fix the last one." It wasn't an excuse. It was a confession. A week later, the company officially accepted every condition without negotiating a single one. Payroll was secured. Suppliers remained on board. Construction resumed on delayed projects. Hundreds of employees kept their jobs, even though most of them would never know how close the company had come to disappearing. As I left the office that Friday evening, my supervisor stopped beside my desk. "You handled this better than most experienced bankers would have." It wasn't praise that stayed with me. It was the realization that the greatest favor I'd ever done for my father wasn't helping him avoid consequences. It was making sure he finally had to face them. The first few months after the loan closed were quieter than I expected. My father's company didn't suddenly become successful overnight. Turnarounds never happen that way. Every month brought another review, another financial report, and another meeting where progress was measured in small improvements instead of dramatic victories. Projects started finishing on schedule. Outstanding invoices slowly decreased. Suppliers who had been demanding payment upfront began extending credit again. The business wasn't thriving yet, but it was breathing. Outside the office, life settled into a different rhythm. I stopped wondering whether my father regretted the way he'd treated me. The question simply stopped mattering. I'd spent too many years hoping for one perfect apology that would somehow rewrite everything before it. Real life doesn't work like that. Most people don't change in one conversation. They change one uncomfortable decision at a time. One Saturday morning, I stopped by one of the company's construction sites to review updated progress reports with another lender. As we walked through the building, several longtime employees recognized me from years earlier. One of the foremen smiled and said, "Your dad talks about you differently now." I looked at him surprised. "He says his daughter works at the bank," the man continued. "Says she's the smartest person in the room whenever money gets involved." He laughed and walked away before I could answer. That simple sentence stayed with me for the rest of the day. My father had never called to tell me he was proud. He'd never apologized for mocking the cafe job or for dismissing every decision I'd made. Instead, he'd said those words when I wasn't there to hear them. For the first time, I understood something my years at the cafe had quietly taught me. Not every apology arrives as an apology. Sometimes people change the way they speak about you long before they learn how to say they're sorry. Oddly enough, that was enough. Because I no longer needed my father to see my worth. He finally did, and he reached that conclusion all by himself. Nearly a year after the loan closed, the company submitted its annual financial review to the bank. This time, the numbers told a completely different story. Revenue had grown more slowly than before, but profit had improved. Debt was falling instead of rising. Cash reserves were finally increasing. The turnaround advisor's final report described the company in one sentence that made everyone in the room smile: stable, disciplined, and positioned for long-term growth. It wasn't the biggest construction company in the region anymore. It was something far more valuable. It was sustainable. A few weeks later, the bank invited several local business owners to speak at a small economic development event. My father was one of the panelists because his company's recovery had become a successful restructuring case. I attended only because our commercial lending department sponsored the event. I planned to sit quietly in the back and leave as soon as it ended. During the question and answer session, someone asked my father what the hardest part of saving his business had been. The audience expected him to talk about rising costs, difficult markets, or negotiations with the bank. Instead, he paused for several seconds before answering. "The hardest part," he said, "was admitting that working harder isn't the same as working wiser." The room nodded politely. Then he added something I never expected. I spent years believing success meant never listening to people who disagreed with me. Turns out the person I should have listened to first was my own daughter. He didn't look toward me. He didn't have to. For the first time in my life, he gave me credit without being asked, without being cornered, and without expecting anything in return. As the audience applauded, I stayed in my seat until everyone began leaving. Walking toward the exit, I realized something surprising. The greatest victory wasn't that the company survived. It was that my father had finally become the kind of leader who could admit he hadn't always been right. People sometimes ask whether everything was perfect after that. It wasn't. My father and I never became the kind of family who called each other every day. We never sat down and talked through every mistake we'd made over the years. Some conversations never happened and probably never will. Life kept moving. His company kept building. The bank eventually reduced its oversight as the business continued meeting every financial target. 2 years later, the final balance of the $14 million loan was refinanced under normal commercial terms. The crisis that had nearly destroyed everything became another chapter in the company's history instead of its ending. As for me, I was promoted to Senior Commercial Relationship Manager. Ironically, my job now involved helping business owners avoid exactly the kind of mistakes that had almost cost my father everything. Whenever younger entrepreneurs came into my office convinced that bigger always meant better, I recognized the look immediately. I'd seen it my entire life. One Friday afternoon, nearly 3 years after the loan closed, I stopped by Brew and Bloom on my way home. The cafe looked almost exactly the same. The same wooden tables. The same smell of fresh espresso. The same bell over the front door. The owner recognized me immediately and laughed. "You finally escaped this place," she joked. I smiled and shook my head. "No," I said. "This place is why I made it." I ordered the same vanilla latte I used to make during my early morning shifts and sat by the window for a few minutes before heading home. Looking around the cafe, I realized something that would have been impossible for my younger self to understand. The job my father once called embarrassing had quietly taught me patience, discipline, humility, and how to treat people with respect. Years later, those lessons helped save his company when money alone couldn't. The $14 million solved a financial problem, but the values I learned wearing that simple cafe apron solved something much bigger. And in the end, that turned out to be the only investment that truly paid for itself. Before you go, think about the one person who never saw your value until it was too late. If this story brought them to mind, share it with someone who'll understand. Don't forget to subscribe, and I'll see you next time.